All right, we're live. So welcome back to Dapp University. So today we're going to talk about something major that's going to happen to the Ethereum network this week and what you need to watch out for. And we're also going to kind of debrief about what happened over this past weekend, because if anybody was watching the crypto space, you might have seen some major trends absolutely popping off, certain coins popping off, Bitcoin and Ethereum, and also some other major, cap cryptocurrencies. All the cryptocurrency market had a pretty good weekend overall. So we're going to talk about that in this video today, look at a lot of other news updates that have happened in the space, and a lot more. So if you're around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to become a blockchain master step-by-step from start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, nothing I'm saying in this video is designed to be financial advice. There's lots of scammers in the comment section below. Just ignore them. I'll never give you my phone number or ask you to invest with me. All right, so we've got people jumping in the chat here. We've got Culture Eyes, Automatic Beats. Welcome, welcome. So we're starting in our new time today. We had again, we do these live streams Monday through Friday on this channel. We had a stream on Friday, kind of a, housekeeping stream to talk about some changes happening to this channel. One of those is that these streams are starting earlier than we have been for the past few months. We're starting now, which is about 9:30 a.m. Central Time. So if you're watching this later, you're like, hey, when can I catch this stream? So we moved ahead 30 minutes. So just reinforcing that little bit of housekeeping in case you're watching this later and want to find out when we stream live. So anyways, so let's go ahead and get started here. So let's first talk about what happened over this past weekend, okay? Because the entire crypto markets did pretty well. Bitcoin has been breaking out of its downtrend. Of course, it's been correcting a little bit here, but let's go ahead and take a quick peek. So we've been watching this for a long time on this channel, basically about how Bitcoin's been in this downtrend for a long time. It broke out of it, and we were trying to look to break $40,000 to look like we confirmed a breakout from this downtrend. Of course, we see this here, and we've gotten that right. We've pretty confidently headed above that up to about $42,000. Now we're trying to hold this $40,000 level. So this is something that's boosted a lot of confidence in the markets. Of course, Bitcoin has flipped, bullish in terms of its long-term moving averages. We've seen a pretty big trend reversal here. So that's something that's given a lot of people confidence. But let's actually take a look at the ETH price, because what's interesting right now is that the ETH price is doing, well compared to the Bitcoin price, despite this correction that we've seen. And so there's something pretty major happening on the Ethereum network this week that you have to watch out for, which is the EIP 1559 London upgrade. Okay, we talked about this for months and months and months and months on this channel, but it's finally scheduled for release this week, all right, on this Wednesday. So that's 2 days from now. So what's the big deal with this? Well, if you watch this channel, you've heard me say this over and over and over again, but if you're new around here, which I think some people are, because we're starting to actually see the metrics for social media engagement around crypto-related topics actually increase, which I think has got a lot to do with the prices rebounding from their lows. So I bet there are some new people out there who aren't quite aware of what's going on with this. Basically, the EIP 1559 London upgrade is a change to the actual Ethereum network itself. It does a lot of different things. It's designed as a user experience upgrade to help with ETH's transaction fees and a lot more. But one of the biggest benefits people are excited about is actually burning ETH whenever new transactions are created. So basically, whenever you create a transaction on the Ethereum network, essentially anytime you do anything on Ethereum where you actually change the state, like you send Ether from one person to another, maybe you swap a token on Uniswap, anytime you do that, when you pay a gas fee, part of that gas fee is going to get split up into two parts, the base fee and the miner tip. And the base fee on the transaction itself is actually going to get burnt. It's just going to get erased from the network. And so that has some pretty significant implications for the Ethereum price itself. Assuming that the demand for Ether stays the same or increases, then that can have positive price impact on the actual Ethereum cryptocurrency or Ether itself. Okay. So this is something that people have been really excited about for a long time. It's finally here. And we're going to see, this rollout on Wednesday. So there are definitely some things to watch out for. I think we definitely have a situation where people are buying Ether, in anticipation of this event. So it could be a buy the rumor, sell the news type of scenario. Or we could see a situation where basically people are, actually accumulating ETH because they know this is such a big upgrade that they're sticking with it for the long term, which I lean more that direction simply because we've seen somewhat of a trend reversal here in cryptocurrency pricing since they've fallen about 50%. It seems like everybody's moving into a mentality of risk on, so to speak, where they're comfortable taking these risks. It looks like the market isn't quite as bearish as it was, even a month ago. So that's the direction that I lean. That this is kind of good for ETH in the short to medium term. But of course, for the long term, I'm super excited about EIP and 1559. This is a long awaited upgrade. That's going to be pretty major for the network. So let me know what you all think down in the comment section below. Do you think this is going to be a bullish or a bearish event this week? So let's see here. Going from Puerto Rico, welcome. Let's see here. You're from Ghana, welcome, welcome. Awesome. Okay, so let's take a look at some other crazy stuff that was happening this weekend, because NFTs or non-fungible tokens have gone absolutely crazy. Okay. So basically, if you're new around here, NFTs are standing for non-fungible tokens. These are basically like digital assets on the blockchain that can't be traded for one another. One of the most popular use cases is digital collectibles. Of course, we do a lot more with NFTs. We talked about it on this channel. But basically, digital collectibles craze has just exploded. And so we saw this boom happen earlier this year, but even more so, where some of the top NFT projects just absolutely, shot up in price. And there's some reasons behind this. We've seen one project in particular, CryptoPunks, which is one of the original OG crypto projects on Ethereum, rocket in price. I mean, some punks are selling for millions of dollars. Okay, and we're actually starting to see scenarios where crypto funds are starting to buy into these. So really, people with a lot of capital and also high net worth individuals buying into these, where it's taking the top price of these punks and raising them, and then it basically brings the entire collection values up. And so we're seeing this NFT trend break out more and more and more. And it really begs the question is how long can this go? Okay, because I've definitely seen quite a bit of euphoria around NFTs, especially on social media over the weekend. Sometimes that's sort of like the red flag about like, hey, maybe we're going to see some sort of correction sometime soon. But a lot of people in the space are thinking, well, now that the high net worth people in the funds are buying these things, that it's going to make it harder and harder and harder, and more people are going to get priced out. So yeah, we'll see. So the big risk with non-fungible tokens for sure is that you have a liquidity problem. So if you're buying, these things and the price appreciates, and then you want to try to get out of them, well, it's not as easy as selling a cryptocurrency where you can just go to an exchange and then just dump it, because there are people, trying to buy, fungible tokens where each token's worth the same. But that's the whole thing about a crypto collectible. They're not all worth the same. So you have to have somebody who wants to buy your individual NFT itself. And so that can definitely have a pretty big impact on the price of the tokens if you're trying to get out of them whenever the game of musical chair stops and everybody's racing for a chair. Well, not all chairs are the same, and so you have a pretty big problem on your hands. So we'll see if that happens. That being said, of course, I think NFTs are big. They're here to stay. They just feel a little bit bubble-ish right now, in my opinion. Somebody says, did the NFT bubble already come and go? So I think this is the situation where we see kind of waves of this happening. The thing that I think is actually pretty cool about NFTs, though, I'm not trying to bash them. I'm just trying to say be careful, basically, because things felt a little bit bubblish, particularly over this past weekend. The cool thing about the NFT trend is it seems a little bit independent of the cryptocurrency markets, in the sense that, NFTs were starting to gain some ground while crypto is pretty bearish. Now you could say, hey, that's just the next wave that gets excitement and the crypto market follows. That could be true. But we're seeing a little bit less correlation in NFT world from what's happening in crypto world, which to me is a really good thing, because it means there can be a lot more attention on the blockchain space, even when cryptocurrency is a little bit bearish, because before then that's the only thing people cared about. But now that we have NFTs, it kind of adds this new dimension of things that people can get excited about around blockchain, even if cryptocurrency is a little bit bearish. So that's a pretty big positive in my opinion. So let's take a look at kind of the overall sentiment of what's happening here too. Especially for Ethereum, sentiment has really changed over the past month or so. If you look at the fear and greed index for Ether, we're actually in the greed territory. And if you look across the other crypto markets, this is a social sentiment checker. Basically, it scrapes what people are saying online and analyzes the content of their speech and tries to derive like their human emotion and determine their sentiment on the actual cryptocurrencies themselves. So they have the Bitcoin Fear and Greed Index, or Crypto Fear and Greed Index. Those are the most famous ones. They recently added an Ethereum Fear and Greed Index. And a lot of these were in the extreme fear territory even just a month ago. Okay, and so it's crazy how fast this can change, and now we're actually firmly in the greed category, which is reflected in the price of Ether here. I mean, this is the first time we've been at over $2,600 since middle of June. Okay, and I think EIP 1559 has a pretty significant factor in this. Again, of course, the overall crypto markets are definitely a factor, but I think this particular event for Ether is playing out in the charts here. Somebody says, is that glass of water made of Ethereum? It looks so shiny. Somebody says, can't be NFTs be anything digital like music or just a JPEG. So NFTs can really be anything. The whole thing about an NFT is it's a non-fungible token. So it was fungible fungible means that you can trade any member of the collection for another one. So if you have a Bitcoin, it doesn't matter which Bitcoin you have. You can always trade it interchangeably for another Bitcoin. Okay. And for a non-fungible token, that's not true. If you have a CryptoPunk, you can't just trade it for another CryptoPunk because they're not necessarily worth the same. Some have different traits. For whatever reason, the collector will subjectively value one over the other. Now, you could say this is intrinsic value because of the scarcity, all that kind of stuff. But anyways, the whole point is whoever's going to pay for it will not necessarily pay the same price or won't necessarily trade them interchangeably. So that just means what non-fungible is, it means that you have all these members of a collection that are not identical. So anything where that's the case, you can model it with NFTs on the blockchain, where you need to assign ownership to an individual. You need for that thing to be transferable. You need to be able to pay for that. You need to prove the ownership of it, prove the scarcity of it. So anything where that's the case, you can model as a non-fungible token on the blockchain. So for example, like a concert ticket, you could model as an NFT on the blockchain. It's just a contract that says you have a claim to a specific seat at a specific venue on a specific date. You can pay for that. You can transfer all that type of stuff. You can do it with intellectual property rights. You can do it with music, like you're talking about here. So there's lots of things you can do with NFTs, not just digital JPEGs on the blockchain. So let's look at some other stuff that happened over this past weekend. So we've been talking more about institutional adoption of cryptocurrency, not just institutions, but also crypto merging in with traditional finance. Okay, and we're seeing another example of that play out, where we see Wealthfront. Okay, converging with this. So Wealthfront is basically a personal capital management platform. It's been around for a long time. And so anyways, they're now letting their clients invest up to 10% of their portfolios in Grayscale, Bitcoin, and Ethereum trusts. Okay. So they have also added more ARK Invest ETFs, allowing more exposure to crypto and fintech related assets. So talk about Grayscale on this channel. So Grayscale is basically a trust where people can buy shares of the trust, and it gives them exposure to cryptocurrency. There's lots of cryptocurrencies in it. Grayscale Bitcoin Trust is a very famous one. Of course, Ether and the lots of digital assets. We looked at them adding DeFi lately. But I've talked about one of the reasons that Grayscale is such an important product is that it lets crypto markets converge with traditional finance for people who want to participate in that way. There's sometimes reasons that people can get a benefit of participating in it that way rather than buying the cryptocurrency assets themselves. That's kind of a polarizing topic because people say, hey, if we want people holding crypto, we want them holding it natively, all this type of stuff. I'm more of the opinion that crypto is an open thing that you can kind of do with it what you want to, as long as you preserve the option for people who want to self-custody and deal with crypto natively. They're still allowed to do it that way. So with Grayscale and then merging in with ETFs and Wealthfront, all this type of stuff. sometimes people need to allocate their funds that way. I mean, maybe there's tax advantages. Maybe they're able to do it inside an IRA or 401k, you know, different reasons why they might want to do it that way. And to me, this is just more adoption. Okay, it's good for the entire ecosystem because ultimately it drives demand for crypto, for digital finance, all this type of stuff. Even if it's not direct exposure, still exposure by proxy. It still is demand side pressure, and I see that as a net positive for crypto, as long as we still have, you know, the option to do things our way. So somebody says Biden wants to tax crypto brokers to pay for infrastructure written into bill before Senate. So we can actually talk about some of that. Now, this is something I actually did see come up over this past week. I think I saw this pop up on Friday. Is actually the U.S. infrastructure bill. So I'm just catching wind of this. I have not really jumped to this very deeply. So it takes, you know, some of what I'm saying is a grain of salt. I've got a tweet thread here from Friday, so July 30th, talking about a new infrastructure bill. So if you're not in the United States, you know, what is this? Why is this important? Well, I'll pull up the tweet thread here and we can just kind of go through it. Again, these won't be necessarily my original thoughts. I'm just trying to, you know, get these facts as they're coming out. Some of these may be a little bit out of date, but if you're not in the U.S., basically what happens is we have bills that have to go through our process of the government, and you know they get voted on and then they get included into our legislature. Okay. So basically, sometimes what happens is they'll have a bill that's designed to, they'll have some title on it. In the case, it's an infrastructure bill that's supposed to have some sort of purpose. But then they'll jam in like all these different, rules and regulations about stuff that's kind of unrelated. They're, you know, trying about how they can, you know, tax things, whatever it is, right? So anyways, inside this infrastructure bill, we have a lot of proposed legislation around crypto. Now, this is not passed. It has to go through a lot of back and forth before it's a final type of thing. And we've seen some revisions on this already from my understanding. But there's some pretty big red flags on this that, people are kind of worried about for crypto. And we can talk about those here. So let's take a look. So basically, here's the deal with the U.S. infrastructure bill. So a new provision has been added that expands the tax code definition of broker to capture nearly everyone in crypto, including non-custodial actors like miners, forcing them all to KYC users. He's saying this is not a drill. So why is this a big deal? So basically, the whole point is they're trying to put pressure to enforce KYC regulations on nearly everybody in crypto. So the whole idea here is if you're doing anything in crypto with your mining, you know, you're using a DEX. If you're American, then basically you have to provide your identity. They want to know who you are, basically, because they want to be able to track all the funds. All right. So the bill expands the definition of a broker to include any person or for consideration, is responsible for and regularly provides any service effectuating transfers of digital assets. I hope I said that right. So the whole point is that their beef with this bill is that the definition is just so broad when it really should be applied to actually brokers in the real sense of like, you know, exchanges. Okay, so it's so broad it could probably basically nearly everybody: miners, proof of stake validators, DEX participants, liquidity providers, all this type of stuff. Where basically everything in decentralized finance, where we should, you know, be able to, you know, act of ourselves without KYC, you know, regulations, that, you know, that's basically how it should be. And this bill has just kind of clumsy language that's trying to create this blanket rule that could potentially capture people who really shouldn't fit under that umbrella. Okay. So what do I think about this? I have seen that some of this language has been revised. Again, I don't have all the details on this just yet. I'm kind of looking at this from a distance. I don't have a ton of original thoughts around the specific thing because I don't have all the facts in front of me. But I do see some worry and concern about this. But it does seem like that there's some progress being made on this. So, but this is important to understand because this is sort of the one of the last big things that we have to fix in order for decentralized finance to really prosper long term. And that's one of the reasons there's so much opportunity in DeFi right now is because we have this uncertainty. It's this regulatory uncertainty. And now we're starting to see potential regulations come into play. Now, here's the thing. If this does pass, we're going to have, you know, many years to adapt to this. The other thing I'll say is it seems like a pretty hard thing to enforce in a lot of ways. So basically, if you have a decentralized exchange, for example, and you're going to require people to KYC, well, how do you know if people are American? You know what I mean? You got people who are, this is a classic problem with, centralized cryptocurrency exchanges. We've seen this happen in the past where we don't serve American customers and they're just like logging your IP address. You can easily use a VPN, like all that type of stuff. So, it'll definitely, I could definitely see it, taking a hit on people who are not going to go down that road or are just going to comply with the laws, all that type of stuff. But it still looks like a pretty hard thing to enforce on a broad spectrum over time. So there's lots of problems here. Again, we'll even see if this passes in the first place before we go too far into the details on that. Again, I don't have all the details. I don't have a ton of really strong opinion on this because I don't have a ton of clarity on exactly what it says, and I would need that before I, gave some really important information or a strong stance. Somebody says they can track all they like as long as they can. Yeah. Here's the thing. I mean, I think people should pay their taxes. So I don't, I'm not advocating people to evade taxes with crypto. But here's the other thing. I mean, people are already KYCing on exchanges. Like whenever you withdraw from an exchange, you can still track most people. If you're super sophisticated in DeFi, you can make it a lot harder for somebody to track you. But even like a lot of the big DeFi hacks, like even the hackers have had a hard time actually absconding with the funds because they end up getting tracked, right? So I think if they're really, this could basically be making tracking easier, right? But at the end of the day, if you really want to find somebody with crypto, you can usually do it. All right, so let's see here. But this is definitely something to watch out for coming down the road because, this is we're gonna have to see, what happens with this, and this is something that I hate how things get done this way. Basically, they have this, major bill that's designed to do something else, and then they include a lot of seemingly unrelated items in there, and they try to hide it from you, basically, and then just jam it through. And the next thing you know have a new regulation that, didn't exist before. Happens all the time. It's pretty common practice with the government, unfortunately. Yeah, I'm not a big fan. Let's get any question here in the chat. Somebody says, why is nobody talking about the Bitcoin Fear and Greed Index, which went from 10 to 60 in 10 days? Is a correction due? So that's a good question. I mean, I think we already are starting to see the Bitcoin price correct a little bit. So I'll just pull it up on my screen here. Let's just pull up the chart. We're already starting to see Bitcoin correct a little bit. I think this correction is healthy because, like this person was saying, the Bitcoin Fear and Greed Index flipped like crazy. And we saw 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I think it was even 11. It's like 10 or 11 green candles straight in a row for Bitcoin. Same side of story with Ether. This stuff was like really taking off like a rocket ship, several green days in a row. So I think a correction is healthy right here. I would be even fine with same consolidation because we can't just do this, every day sustainably, right? Stuff would get way too frothy, way too fast. And if we really are going to get to our, Bitcoin, my personal price targets of, 100K per Bitcoin, 10K per Ether, we're gonna have volatility along the way. So I expect volatility. You're not just gonna get there with a straight up line. All right, so So my TA guys convinced we are bullish now. All right, if you spam the chat, I will hide you. It's off topic, but I like your videos very much. How can I fully rely on it and possibly become a blockchain engineer? That's a good question. So we definitely have people, go through the YouTube videos, also go through the programs who have changed their careers, become blockchain developers the fastest. I've personally seen it happen from the Dapp University Resources has been 2 months, and this person did not really have much programming experience before. They had a little bit of system admin skills, basically a security engineer. But basically a new coder. They had some time on their hands, so they're able to devote a lot of time and energy in the 2 months to change their career, but they got their first job that way. So definitely, yes, you can do that. We've had lots of people go through the blockchain bootcamp to do that as well. We just had another success story from somebody who got their first 6-figure remote job as a blockchain developer, and going through that program as well. So definitely possible. Somebody says, does the monthly membership option for master classes include all master classes? Yes, it does. Somebody says, are smart contracts able to do transactions on a certain date without an outside trigger? So not natively on the blockchain, but what you can do is basically, let's say, we've seen this with like rebasing tokens, for example, or like inflationary tokens or anything where a person's balance changes over a certain amount of time, or vesting even. Is basically you can you don't have to create new transactions, but let's say like you want somebody's balance to increase based upon a certain conditions over a certain amount of time. You can check the block timestamp to see how much time has passed, and then do some math with the number of seconds that have passed since the previous block, all that type of stuff, and basically saying if you're past a certain block time, then like you have a greater balance if these certain conditions are met. So there's certain things you can do, but you can't really like execute like timed transactions in a fully decentralized way natively with smart contracts on Ethereum out of the box without any other sort of external actors, I'll put it that way, in a trustless way. Now you can do stuff with like Oracle projects, all this other stuff, but if you're talking about true just natively with Solidity with the EVM inside of smart contracts, then no. Somebody says, thank you very much, but do you always have to trigger a function that checks the timestamp? No, this would be like a read-only function. So like saying, what's your balance? Is your balance, 1 token? Is it 100 tokens? And over time, we can check the block timestamp to check your balance based on a certain set of conditions. Somebody says, I have zero coding experience, but I'm super bullish on blockchain. My computer science degree tomorrow. Starting my computer science degree tomorrow. Thinking about Dapp University as well. Thoughts on doing both at once? Yeah, you can do both at once. The key there should be pacing. But I think it's good to actually learn both at once because then you have a purpose, right? You basically, if you're saying, I'm learning computer science to learn blockchain, then like having that blockchain knowledge and seeing how computer science concepts fit towards that goal is going to be super important because sometimes it's really hard to just learn concepts in abstract without having a goal in mind. It works. It's just slow and it's less sticky. Okay, so think about all the times that you might have been in school before, and maybe like in like pre-university, pre-college. So in America, we call them like elementary school, middle school, and high school. I know different places call them like primary school, that type of stuff, but basically when someone's about like 10 years old to 12, 13, 14, one of the most common things you hear is like, hey, when am I ever going to use this? Right? So somebody's sitting in a class and a teacher's just like shoving dry concepts down their throat and they're like, when am I ever going to use this? When am I ever going to use this? Okay, so it's very easy to do that as a way of teaching because they have to like systematize the curriculum and say, well, you got to learn this now, and then you got to learn this now. But the problem is those concepts don't stick as well because you don't see the purpose. You don't see, when am I ever going to use this? But if you have a purpose in mind and you're learning the concepts to the end of attaching those concepts to your purpose, they're a lot stickier and you learn a lot faster. So this is blockchain is the only reason I'm doing computer science. Awesome. Somebody says learn by doing. Yep, totally. So where does your React skill level need to be for blockchain dev jobs? Honestly, I would say passable. It's one of those things, as long as you know React well enough to build something from scratch, you know, that's a skill you can definitely get better at on the job. The primary knowledge is your knowledge of blockchain and smart contracts, depending on what job you're trying to get. If your job is to become a smart contract developer or a quote unquote blockchain developer, you want to have your strongest skill set be in blockchain. I mean, React is very good to have, and in many cases essential to have, but it's a secondary skill. So should I learn web development first before learning blockchain development? So this is a really common question, and I have a perspective that is different from most people, which is no. You should learn the thing that you want to learn first, okay? So if you want to learn if you want to become a blockchain developer, like learn blockchain first and then learn the other web development skills as you go, okay? So there's some nuance to this, like, you know, if you're learning to code for the very first time, you might have to do a little bit of both, you know what I mean? Like start with learning blockchain and then kind of just like back and forth in order to get the basic concepts under your belt. But the whole point is you don't want to say, I'm just going to go learn web development by itself for a long time and then go switch over to blockchain. It's super slow, and you won't, I mean, you can do it that way, but if you're asking my advice on what should you do, I wouldn't personally do it that way. That's not how I teach other people to do it. Learn blockchain first, learn web development as you go. Because it's just like I was saying before, if you're sitting there going, when am I ever going to use this? Like the kid in school who doesn't understand like why they're learning the concepts they're learning. When you see like why you're doing something and how it actually affects your end goal, that makes it so much stickier. And you're going to retain the information better, and you're going to be motivated to learn the information, which also speeds up your learning process. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out, so the more people can learn about blockchain. You know, if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, I can show you, you can go to my YouTube homepage. You can find my free courses there, like Udemy courses, but they're totally free. If this person's asking, like, how can you learn, if you don't have any coding experience, should you learn web development first? Should you learn blockchain first? Well, you can just go grab any of those courses. They show you how to learn by doing, so you can just like kind of get your feet wet with the blockchain, build a step-by-step project. You'll learn blockchain and web development as you go while you're doing that. It'll give you that purpose that I'm talking about. All right. If you like those videos and you want to take the next step and really learn like real-world professional blockchain development skills, I should do that step by step, start to finish over at dappuniversity.com/bootcamp. All right. You don't have to be an expert to get started today. Like I was saying before, I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.